So let's go 10 years out. Like, where do you think this is all gonna end up? Like in 10 years, are we all gonna have essentially a digital wallet and our bank account is just gonna be kind of like a vault? Is
Yeah.
this gonna be happening all around the world? Or like what's the if my Star Trek vision is too far out there, what's realistic in sort of like the 5 to 10 year time frame that's
Well,
gonna
let
feel
me flip the
different
question
from
around
today?
for you.
Yeah.
What's the difference between a digital wallet and a bank account?
Howdy, folks. Welcome to our podcast for this week. I'm really excited to have Ayo on the podcast this week. Ayo and I both worked at Square, but we did not overlap. I got into Ayo's mafia of the Square Mafia through a paper he wrote called the Default Card Issuing Platform, and I was transformed. The result of that read has been one of our portfolio companies has tried to launch Ayo's vision. We'll see whether we live up to it. Let me, without further ado, introduce you to Ayo today. And please, Ayo, just give a little bit of your background and tell us a little bit about your journey and how you got to be part of Square and a little bit of an update with where you are today. And then we'll dig in.
Awesome. Thank you all for having me. So currently I run product at Carbon Health. And in that role, I'm basically, hopefully helping transform the future of healthcare and make healthcare better and cheaper and more technology enabled and all those things. I can talk more about that if it's interesting. Prior to Carbon, I've been here about 13 months. Prior to Carbon, I spent about 5.5 years at Cash App. Most of my time there was building out the foundational banking team and infrastructure on which the Cash Card is built, and now the Square Card. In addition to that, I worked on early on some P2P features and growth, and I was actually recruited to Cash App to run a payments API product, which ended up never seeing the light of day. I think mostly because it was just a bad idea. And before Square and Cash App, I started a company originally in gaming and then pivoted to developer tools before we sold it. We went through YC in winter 2012. And before that, I started several companies that went nowhere, which I think is fairly common in Silicon Valley. All along the way, or more recently, I've started angel investing, primarily in I would say 4 domains: fintech and other regulated industries, what I think of as like founders in transition, founders who their last mission has ended, they're looking for a new one, and their reality is kind of ambiguous. Actually, I'd say like those are 2 big buckets. There's smaller buckets inside them, but those are the 2 big ones. And over the last year, the way Greg and I met was I started writing, and my objective in writing was I had all these ideas that I didn't know who to talk to about, and I figured people on the internet will tell you you're wrong. Like nobody loves people on the internet love telling you when you're wrong, and so the easiest way to find out whether I was wrong about something was to tell the internet about it, and that's actually happened. It's been great.
Well, I mean, from my point of view, you told the world how what Stripe did for taking a card. You suggested a model that would be almost like a Stripe-like ability to issue cards. Can you give just a quick recap of what your fundamental insight was behind the paper, or the challenge you laid out, the gauntlet you laid out?
Yeah. I think there are a few dimensions this came from. One of them was, so one of the projects, or 5 of the projects I worked on when I was at Cash App were doing the core banking card issuing integrations on which Cash Card was built. In that process, we did, I think, 6 exploratory banking integrations and 5 exploratory, like what is now called banking as a service integrations, but really were just card issuing platforms. 2 of which, both on the banking and card issuing side, are still, I'm as far as I'm aware, still alive. And we had several moments where we just wished there was like an API we could call to where we didn't have to go through some extensive RFP or business development process just to get just to see if the system would work well. And this was true in card issuing, but I think it was actually true in a lot of other technical domains as well, where in a pre-API world, or in a pre-permissionless world is a better way to describe it, the process you have to go through to just even tell whether a particular vendor or platform was suitable for your use case was incredibly onerous. Like, you would fly to a place, talk to, a bunch of people on your team would talk to a bunch of people on their team. You would have the engineer on your team would look at their technical documentation and they would, tell you what was right or wrong, but you couldn't actually kick the tires till you'd had several of these like exploratory discussions, signed up for their service, signed a pilot contract. Very often they wanted to like lock you in. And so it was this very weird process where you have to do technical diligence before doing any technical work. And as a result, you would be months into an interaction and months into an integration before you discovered how the integration was incorrect for your use case. And so we just experienced that over and over and over again. And so the place where that was most acute was in card issuing, and we had the benefit of the engineering team that I worked with on the card issuing stuff was incredibly senior and capable and flexible. And so that took away a lot of the sting, but fundamentally, being able to kick the tires before committing would have led to a better experience for us. B, I still think it would be an insane competitive advantage. I know there's a few companies like doing this now, but it would be an insane competitive advantage for the platform itself, because then the best platform technically would actually have a shot at winning, rather than just a platform with the best sales team,
Right.
which are that may also be the best platform, but those two things are like fairly orthogonal. It is, easy to be, it's one thing to be like the technically best platform. It's another thing to be the technically best sales organization. And both of those things can exist in actually different orgs. And so we were trying to, like the core impetus for that was we faced it. And I didn't think about this much, but then when I left Square and I was thinking about what to do next, I talked to a bunch of founders who were going through the process of figuring out how to do card issuing. And one of the questions that came up over and over again was like, hey, which of these things should I use? Can you sit in a vendor call with me and ask the right questions? Can you look at a contract for me? Can you look at an API for me, et cetera? And it just got me thinking that all of those, like, there is a shortcut, and the shortcut is, someone has to make it. If somebody makes it super easy for an organization that wants to do issuing to just try before you buy, then everyone else will have to.
Right.
Eventually.
So just full disclosure. So I think you guys ended up going with Marqeta.
Yeah.
I'm a founding advisor and shareholder and early investor in Marqeta. Also, Meg Nakamura, who runs Apto, also worked at Marqeta. So it's all sort of in family, but it sounds like it was quite a long and painful process. But the metrics that have come out of what Square has done now that it is in market have been pretty incredible. I mean, I think you guys have I don't know the most recent numbers, but it's in the tens of millions of cards that are in force. And I think it's important for people to know that Square had tried a wallet before that didn't go anywhere in its history. And so this was the second time around. And B, Square started really late compared to like with a wallet, compared to like Venmo and a card. But I'd love some perspective about what the journey was. Like, I don't know if you got some of the war stories about why Square didn't have an initial good experience with a wallet, then came back at this a second time around with a much simpler offering, and how Square started, behind Venmo, behind PayPal, and actually got a position in the market and has really moved into arguably a commanding position in the marketplace. Just a little bit of perspective about how that all happened.
Yeah. So a couple thoughts. So first, when I think Square's initial run at the Square Wallet and the Square Card were both ending right as I joined Square. So I joined Square in May 2014. And so I don't know if I would be really qualified to speak on why it didn't work initially. My intuition is, you know, if I think of what Square was prior, like what Square was and what it was focused on when I was working on the initial wallet, it really was like, the merchant was the hero customer. And so you end up, it's really in the 1,000 decisions that you make every day, you end up making these trade-offs where when you have to choose between what's right for the merchant, what's right for the user, for the consumer, if you're making a consumer product and the trend of your decisions lean towards the merchant, it's not like inherently adversarial, but it just sometimes is. And so if the trend of your decisions leads towards the merchant, it's just going to be hard to it's hard to make a better product for a consumer when you're focused on optimizing for the merchant needs than an organization that's focused on optimizing for the consumer's needs. So that's like my high level read with some looking back, like when I was at Square, but I wasn't at Square at the time, so I actually don't know what they did. So I think, I would say like Cash App sort of starting after and eventually surpassing Venmo. And I think this is like one of the things that's hard it's hard to say outside of Square because, people don't like, it's just easier to have hey, they had the magic sword. Like there was the one thing that they did well, right? That's the story that you want to hear, that we're trained to hear. But I think the reality is, there's two dimensions. Like one is Venmo literally went through like, 2 acquisitions, like Venmo to Braintree, Braintree to PayPal, and then probably a bunch of like internal, like I remember hearing at some point that at some point PayPal was thinking of rebranding Venmo as Venmo by PayPal. So like I can only imagine just the organizational thrash that that team had to face, and the founders left, around 2013, I think. So I think that just like there's just no way that didn't have a detrimental impact on their execution. And Venmo is a phenomenal business. Like it's a huge company anyway. It just is relative to the potential. Did it actually execute? I think the other part is Cash App as a team, as with everybody who's successful, got lucky, but also was extremely good at many things. And so like the design practice was really, really good. The money movement practice was excellent. The risk practice was excellent. The engineering discipline was incredible. And sort of many other things other than that, like the approach to regulation, the just ruthless focus on what consumers needed, and user acquisition, even growth, marketing, et cetera. And so just one thing that's like fairly difficult to like, I wish I could say, hey, it was the design. It was, and it was the other 5 things. And it was just, it's kind of like, if you have quality execution on 5 dimensions and you're playing against somebody who's quality on like 1 or 2, the odds are just like really, really stacked in your favor. And Cash really had a very stacked team on many dimensions.
But I mean, it's just like the numbers compared to like the wallets of any bank. I mean, it really has, and in particular, the amount of money being made per customer. So it's not just that it's a person-to-person transfer app, the fact that you've gotten into payments, now people are using it for investment in crypto and whatnot. The value of per customer is a multiple of what it is of other digital wallets and bank wallets. And so it's transformed kind of thing. I think it's also reflected in some of the expectations on Coinbase, as Square has demonstrated the value of having a digital wallet customer. And I've seen figures that have suggested that as high as a $20,000 value per customer over the lifetime of a customer. And I think Square is doing things like, people are getting direct deposit of their payrolls into Square,
Yeah.
and it's really become not just a P2P transfer, but it's become, a real payment method as well. And it's not just servicing, yuppies and millennials. It's hit like and been popular in Trump country as well. I mean, it's been a really broad-based
Yeah.
phenom. And again, I'm just so surprised. Like, I was long gone from Square, and I'd always wanted to see something like that. And my gosh, the wave came late, but it came big.
Yeah. Yeah. I think that's accurate. Yeah. I mean, I think I can't speak to the numbers and the values. I think like all I would say is a lot of the potential is still ahead.
So that's interesting. I mean, already just Square as a company now has 10x the value of Western Union, 100x of MoneyGram, and so I'm not sure people have gotten the perspective. Like, PayPal now and Square together are worth as much as any major, like as much as any major bank in the United States. The valuation is just. I remember when eBay bought PayPal, and now PayPal is worth 8 times what eBay is worth, and so the numbers here are crazy. And I guess, was there, when folks were there, like, it seems like the Square wallet now gets more attention than the merchant side of the business. Was that a conscious objective, or did it just kind of sneak up on you guys?
I mean, I think there's like a couple factors. Like, one of them is the team at Cash App still, like, and have worked with Brian, is insanely ambitious. So I think that's just true. Like, however you slice it, I don't think Brian, and certainly not me when I was there or anybody else there, ever thought of what we were doing as Square's second act. It was definitely like, we're trying to build a world-class / best in class consumer financial product for everyone on the planet. And so you can argue about whether they've executed on that or whether they'll be able to execute against that, but that's the goal. And there's no way that doesn't end up being massive. I think a second thing that really is just, if you think of the DNA and roots of Square on the seller side, Square, like, I'll use Square versus Stripe as juxtaposition because that's kind of the easiest distinction. Stripe is, as a mission, increase the GDP of the internet. Square is, as a mission, economic empowerment. To the atomic unit of value that a Stripe transaction provides, which is exchanging a credit card like kind of anywhere, requires much less activation energy, and it is inherently growing much faster than two people in the real world interacting around a card. And so if you just like think of the effect of that when shelter in place hits, people in the real world interacting probably dropped last year to an all-time low as a percentage of human interactions in the history of humanity.
Right.
Maybe, with the exception of during the plague, like I don't know if it's ever been, if the percentage of in-person interactions relative to total interactions has ever been as low as it was last year, which meant Square's core business, which relies on humans in the real world interacting around a payment, there's just no, like, they would just have to like dig out of this massive hole to get out of it. And if you think of what the cash business has become, it's P2P, card payments, both offline and online, crypto, investing. 3 of those 4 things do not require 2 humans to interact in the real world. And
Right.
so, and if you think of the like sort of defensive dynamic of, at the same time when Square's core business was just hitting that in-person interaction wall, the traditional banking industry, Western Union, MoneyGram, Chase, B of A, imagine for the month last year where shelter in place was like kind of universal across the United States, basically there was a month last year when the bulk of new account creation and financial transaction activity shifted from being primarily in person to being primarily online. And Cash App was the number one finance app in the App Store at the time. So it's just, like the same thing that really put a constraint on Square's core business actually was a massive accelerant for the cash business.
So, the Star Trek leap still to be had, I believe, is when someone who has a Square wallet shows up at a Square merchant, and the Square merchant also has the equivalent of a commercial version of a Square wallet, and that payment just happens essentially as an on-us ledger transaction. It doesn't actually need to go through Visa or MasterCard or a bank. It's like you go to the casino and you don't need to go to the window anymore to get your chips. You just sit down at the table and everybody's got chips. And so I guess, I mean, that to me is at some level, I realize Square is also a partner of banks and Visa and MasterCard, but somebody's got to be shitting a brick out there that if this world happens, it's just all an on-us transaction, and that role of the banks and Visa and MasterCard is really kind of passe. Or I don't know whether that's heresy still to talk, or
I mean,
where we are on that pendulum swing.
So I think this, to me, and I can't speak for what the cash team is thinking about now, but to me, of all the things that a consumer financial service like supermarket, like Cash App could work on, of the top 10 things, I don't think that's even number 100.
Interesting.
I think there is a theoretical future, probably at least one order of magnitude scale difference, maybe two, where the value you would create by pulling Visa out of the loop or pulling the card networks out of the loop is greater than the value you could create in all the other things you could do. But I think Visa, MasterCard sort of stand out to be these villains. And how you look at that is probably more of a Rorschach test than a reflection of sort of reality. But I think the fundamental truth is, around a transaction, there's just things that have to happen. Like, it's not like, even a thing I always think about, like with crypto transactions, for instance, is, and you see a lot of this now being built with some of these smart contracts, is there is a reality where the financial interaction between the buyer and the seller has to be mediated somehow, right? There is a reality where the seller can cheat you or the buyer can defraud you. And right now, I don't know, of the 2.5% or whatever the Visa and MasterCard take, I don't know how much of that value is I can't say hey, they actually should only be rewarded 1.5% for providing that value. But I think it is going to be incredibly difficult in a world where consumers expect that to, excuse me, it's going to be incredibly difficult to not provide that on any payment network that you create. And then I think all that to say, you can argue that maybe Visa, MasterCard are going away. That concept is not going away. And I would actually, in my interactions with Visa in particular, it's an insanely strategic organization. Honestly, more so than literally any other org I've interacted with. So I would not be surprised if after the dust settles, the organization doing that on the blockchain is also Visa.
Yeah, and through my portfolio comes we're Visa and MasterCard are principal members. So we're on both sides of this, but it does sometimes seem kind of like when you're standing in front of a merchant and he's like, oh, I use Square, and the payer is like, well, I use Square too, and it's kind of like, you do the bump and stuff like that. It's just it's not clear that Visa and MasterCard need to be in the room. Now, obviously, in all those other situations, you need them as that trust intermediary.
Yeah, I mean, but even in the Square case, whether or not it was Visa and MasterCard, with all left to Square, somebody's playing that role.
Sure, somebody is. But I'm just, some of the times I just wonder whether it's going to be, Square has enough, enough risk and risk insight and balance sheet and everything else to kind of do a, an on us. Look, I know Chase with Chase, a big issuer, Chase, a big acquirer, and they've negotiated their own special deal with Visa to basically do a lot of those settlements. I mean, they use Visa's infrastructure, but they do it essentially as an on-us transaction, and they have the economics of doing it like an on-us transaction. And so I just, again, I don't know what that tipping point is.
I don't think that's necessarily an accurate characterization of how Chase works. Like, I think I know what you're talking about, the like payment tech thing, but I actually think that under the hood, what's actually happening is, and you guys sort of have interacted with Visa. There's just the relationships and the ways that you interact with these card networks are so intertwined that if I was to infer what is happening, probably what is happening is the card networks have made the economics of what otherwise would be an honest transaction roughly equivalent while maintaining access to the data. That would be my interpretation.
All right.
I can decide on that.
All right. So let's go 10 years out. Like, where do you think this is all gonna end up? Like in 10 years, are we all gonna have essentially a digital wallet and our bank account is just gonna be kind of like a vault? Is this going to be happening all around the world, or like what's the, if my Star Trek vision is too far out there, what's realistic in sort of like the 5 to 10 year time frame that's going to feel?
Let me put the question around for you. Yeah. What's the difference between a digital wallet and a bank account?
Well, in my mind, there's not a difference. It's just that one is issued by folks that are nimble and like to rock and roll, and the other are folks that are being like kicking and dragging and and brought to the party and stuff. And so the banks, like let me give the example. Like Zelle has like kind of a digital wallet, but like I met their CTO and I said, what the hell? Like in Zelle, I can't even like see my balances and stuff. He says, well, if we make Zelle too good, our partners who are banks are going to be mad because people are going to download Zelle and they're not going to download the bank app. So they want me to make the app bad enough that people won't give up their bank app. And I'm like, that must be a pretty frustrating place to work. He says, yeah, that's why I'm quitting. So if you're working with other folks where their goal is to be just good enough to like not like disintermediate themselves, it's like when you talk to like Elon, he says, hey, look, all these other car companies like Volkswagen, they're going to like invest in electric cars too. And it's like, yeah, they are. And if their electric cars are real good, guess what it's going to do? It's going to destroy their gas car part of the business. And they're going to be like crying boo-hoo. We don't have to worry about disintermediating our own existing business. And so the banks have that problem, is whatever they do to chase Square or Venmo just basically is a kick in the pants to everything they've already done and already have as physical assets.
Yeah. I mean, I think so. I think the constraint around physical assets is real. Like I to date, I don't actually know if there's I think the only there's like 2 transactions, maybe 3 transactions that you can't do online. Yeah. Getting cash.
Yep.
Certified checks and money orders and mortgages. Both the getting cash and certified checks and money orders are just a different tender type to a transaction. So like actually the end thing that they get you can generally do online anyway. The mortgages I think are primarily around like risk and some regulatory constraints, depending on the state that you're in. So like to me, what that means is 10 years out, if you, and so I actually do believe like Chase is a really incredible organization. And I don't think Cash App and Chime and Square and Stripe, to be honest, would exist in the state that they, with the level of success that they exist with, if Durbin didn't exist.
Right.
But,
and just so folks know, Durbin creates this exemption so smaller banks can allow Square to like earn good interchange that bigger banks can't make. They've been regulated down. So to them, running cards and a lot of the services basically sort of a lost leader.
Yeah. It also for any acquirer that's processing debit cards, it dramatically improves their margin on debit card processing.
There's money to do that. And the Europeans don't allow that either. So we have this particular anomaly in the US where you can build a profitable card-based business if you work with a small bank that's under this that gets away from this Durbin rule.
Yeah.
Special
Exactly.
carve out for banks with under 10 billion in assets.
Exactly. And so I think like in abstract, I don't think of digital wallets and bank accounts as like, I think they're manifestations of the same thing, which is a pool of money that belongs to you.
Yeah.
And if you look at like the Chase app and the BofA app, whatever else you might say about how they've implemented things from a core money movement perspective, they're like pretty good. Like they're, you know what I mean? They're just fine for 90% of the things that a user would want them to do. And then you can argue that like, hey, they're the way they've implemented it and the user flows and the way they do IDV and all these things are like bad. I think it's possible for them to get as good as like they can just copy their way into victory.
Right.
The two things they can't get over Durbin. Like Chase can't become un-Durbin regulated. And so that will always bound who they can service profitably. So that's like one problem. And the second problem, which I think is actually the deepest problem, is if all you said was Cash App or Chime are just the equivalent of Chase, like if all you said was that, technically, the Chase has 5,000 branches, Cash App and Chime don't. So they're just like a part of the cost structure that I think actually doesn't need to exist today.
Yeah.
That currently exists. And so my intuition is what will happen over the next decade is as Cash App, Coinbase, Chime all move up market and like become more and more mainstream, it will put downward pressure on sort of incumbent margins, and that large fixed cost that they have that these sort of challenger banks don't have will become more and more of an anchor.
Yeah, I just try to think of what's the last thing I went to a physical bank for, and it was to get a safe deposit box.
Yeah, exactly. Another one.
If that's the business, if they really want to have all those branches to have safe deposit, that's like a different business. They might as well combine with the place where I go to store my extra furniture and stuff. That's just like safekeeping.
Yep.
I mean, really, literally. And so I just don't view that as a very.
And you can also imagine there's like probably also ways to like disrupt that business.
There ain't much skin left in the game for them to go after. But yeah, I mean, I view banks, this is my view, is just like as mobile phone companies became dumb pipes because all the intelligence moved to the app store. They don't really capture that much. I mean, a bank might still be a place which is a custodial facility, but even there, with Square going after new licenses, there's other folks entering the custody market. I'm not sure there's gonna be any scraps left over for anybody that doesn't, revolutionize that size of the model. So I just don't know what part of the bank protected monopoly. The one thing banks have is they have direct access to the payment system. And I used to work at the Fed, and when I have a bank charging me 25 cents to do an ACH transaction, just a batch ACH transaction, and I know at the Fed we're charging that bank 0.25 cents. I said, guys, that's not 100% markup. That's not 1,000%. That's a 10,000% markup. And it's the same for wire transfers. They charge you $25. We charge a quarter from the Fed for them to do it. So they're making a 10,000% markup. But without that implicit subsidy and oligopoly pricing, I don't know what banks can do to make up for all the other stuff they're doing at break even or a loss.
Yeah. I mean, my intuition is, I think at heart they all do fine, just because again, the other thing to think about is like if you think of what Chase does today, like if you, Greg, signed up to Chase today, they give you $500. They're not going to do that for everybody,
right?
But like that's just like a hard, like if Chime or Cash App or Digit or any of these companies came to you and was like, all right, we're going to go after Chase customers. Our customer acquisition cost is going to be $600 a customer. You'd not fund that company.
Right.
And so I think they just have like a pretty remarkable war chest with which to play defense. It may also be the case that these companies move away from consumer finance eventually. But like, again, like my intuition is that like, there's always going to be room, like the stuff they do technically is fine. I think between like Chase, Wells, BofA, Citi, TD Bank, et cetera, the big question is who rationalizes the fixed cost first?
Yeah.
And some of it is literally physical, like buildings, but I think some of it is, you know, when we were doing the early investigation on Cash App for card issuing, these systems like FIS and Fiserv that a ton of banks have, you know, hosted on-premise card issuing infrastructure for cost, like for you, Greg, to have a bank account on Chase, cost Chase $36 a year. It's $3 a month around, regardless of whether you use it or not.
Right.
And so there's just this massive hurdle. And it's actually, I think, it's one of the things that makes the Durbin thing so painful, which is that like their costs were already so high. And then to add insult to injury, there's a whole category of customers, which is most Americans, who just were no longer profitable anymore overnight.
Right. Wow. I think we've run over on our time. We miss you from the payment industry. I know you're dealing with another industry that's even a bigger, you know, bigger mess than financial services, but Ayo, we miss you. We hope you come back. Thank you for the advisory work you've been doing for GlobaliD. It kind of spills over into our other portfolio companies, but
Anytime.
you know, have fun in your new pursuit, but do come back. When you finish fixing healthcare, please come back and finish the job you started at Square. I think there's more work to be done.
Appreciate it. It's very kind of you.
Okay. Thanks for the time. Take care, everybody.
Thanks, team.